Good afternoon, everybody. Delighted to, or good morning, depending where you're based. Delighted to be hosting this webinar with Nick Edwards from Interpath. Nick, thank you very much for your time today. Today we would like to take you through an AP maturity assessment and turning that into a business case. But I think we're going to do this on the backdrop of a lot of the challenges that businesses are facing in relation to working capital, market conditions, EInvoicing, and how all this plays out into making your processes more efficient, but ultimately having better working capital and reacting to the ongoing market needs that we have at the moment. So Nick, thank you very much for your time. Thank you for joining us here today. I was going to do a quick intro on the agenda, and then we can give Nick the opportunity to introduce a bit background on Interpath. We've been working with Interpath for the last 12 to 18 months and a number of different clients in different areas of where we see a lot of synergies together. So delighted to have Nick joining us here today. So we'll do an intro in a moment. As I said there, we'll talk about some of the market conditions and some of the things that are being forced upon a lot of clients. Mandates from the EInvoicing is having a huge impact on planning in the next 2 to 3 years. Generic industry challenges, what's going on both locally and globally. Then I'm going to ask Nick to delve into a few working capital KPIs and how they translate back into the AP function. Then we'll talk a little bit about the P2P maturity assessment that SoftCo conduct with you and work with you on a roadmap, and also we'll bring Nick into that in terms of what roadmap those guys look at in Interpath from a working capital cash management position. Best practices in P2P. The implementation journey as to how you would go about that, and then ultimately what it all comes down to is there an ROI in this overall process? So again, that's the agenda. We hope to cover all this within 40-45 minutes. Thank you very much again for all joining us. There's more people joining here, so before we get roll on, let's give it a moment. So I'm just going to give it 10 seconds here. So I'll keep going. So there's many on the call here that may or may not be familiar with SoftCo. So we're an AI native P2P automation platform, specializing very much in working with you and your clients' needs around making the invoice process or the P2P process improve, ultimately reducing touch points. There's a lot of chat in the market about straight through processing, but also the governance around your whole AP and P2P process. And what we do at SoftCo for the last 35 years is work with many leading clients around improving touchless processing, non-PO invoice processing, but also looking at your spend management, your supplier data, and looking at the whole overall process to give you more control, better visibility, and ultimately better processes to feed your working capital. Nick, I'm going to ask you to join in here and just give a little background. Again, thank you for coming along today and thank you for your time.
Yeah, hi everybody, and thanks, Killian. Delighted to be here, so thanks for having me. So I'm Nick Edwards, Managing Director in the Value Creation team at Interpath. Interpath is a business that some of you may be aware of, some of you may not be. We're a business born out of KPMG in 2021. We weren't able to help the clients in the way that we wanted to, with the other changing restrictions around audit and governance of Big Four. So we've been going for 5 years or so now. 3 areas that we help our clients around deal advisory, so helping our clients to buy businesses through kind of buy smart and sell smart. Throughout the investment life cycle, we are a partner that like to work with our clients. In the advisory space, so helping businesses to uncover value and grow, and also in the restructuring side of things, which is really kind of I suppose part of the business's core when it originated in 2021. I sit within the advisory practice, so I help our clients to create value really across 3 areas. The first being working capital improvement, so helping our clients to improve working capital through the supply chain, through customers, through holding this inventory. The second is around getting really good visibility of liquidity through cash flow forecasting, either on a short-term 13-week direct basis or on a kind of more medium to longer term liquidity plan. And the third area is around treasury management, so making sure that when businesses have got cash, they're managing that as efficiently as possible. Killian, I suppose that's a very quick introduction to Interpath.
Yeah, Nick, thank you very much. I think lots of that will resonate with our audience here today. There's a lot of people, I suppose, being challenged with a lot of those areas, particularly liquidity, working capital, inventory, lots of challenges in the supply chain at the moment through all the geopolitical landscape. So all of that resonates, I think, with lots of different attendees here today. I suppose we're just going to come on to that in terms of evolving market conditions in the UK. I know we've been working with lots of UK clients for over 20 years, but since 2017, there's the payment practice performance regulations have come through, and there's more reforms came into that in 2025, and there's the Fair Payment Code. So I think that's, I suppose, reflective, Nick, of what's going on in the market, that people are being challenged to pay quicker, pay on time. There has a bigger thing, and we've had a number of different webinars with different people in this space before. But was just, what's your sense of the market at the moment, where that's going?
I think that it's a really interesting topic. I think across Europe, with the kind of geopolitics, particularly, there's an ever increasing focus on making sure that people are getting paid fairly. We've seen quite strict rules in France, other European jurisdictions. The rules are slightly different, but I think particularly an interesting topic, making sure that you've got your house in order, because the visibility, certainly publicly through things like payment practice reporting, mean that there's increased scrutiny on this topic. So definitely an area that our clients are talking to us about every day.
Okay. And I suppose, look, we did a webinar recently with PwC on e-invoicing, and there's lots of legislation coming down the market for that. And I know UK in particular is focused on the 2029 mandate date of that coming through, and there's different European countries that are being imposed with. Last year we had Belgium, just started this year we had Belgium, we had Germany, and there's France coming on later on this year. So these things have an impact because people are looking towards kind of, I have to pay quicker, I have to be compliant from a system point of view, I need more automation. So based on some of the conversations we've been having over the past 12, 18 months, cash liquidity and payment and having the ability to react to these things is hugely important. So do you see invoicing playing a big role in this as well?
Yeah, I think definitely. I've had it recently with a client that has a big presence across Europe. Belgium is one of their core markets. So firstly understanding the requirements of their business and what it means from a day-to-day perspective in terms of processing invoices, what it means in terms of suppliers and information sharing between parties has been really important. Other jurisdictions, as we know, as you mentioned, other jurisdictions are coming live over the coming months and years. So it's definitely, again, an important topic to our clients, and yeah, we're getting lots of questions on this space.
Okay. I suppose, look, given your space and our space, and we're kind of both sides of the same coin in terms of the finance world, we had a customer advisory board quite recent in relation to just, I suppose, industry challenges and what are people looking at. And recently at that, there was many people who were being asked to adopt AI where practical, but I suppose there's an awful lot of concern that you get as people refer to the AI hallucinations of what may or may not be correct. So that's one challenge. In your world, I think you mentioned there, you specialize in deals and advisory, so acquisition and mergers, quite a buoyant market in lots of different verticals and lots of consolidation in the retail, manufacturing, distribution space. And when people are looking at that, I think it ties into do more with less. So people are saying, look, we're going to buy your business, but you're not getting any more headcount. And all the while we have the Ukrainian situation going on, the Iranian situation, there's many geopolitical things that are creating cost of goods rising, cash positions changing, cost of goods and cost of the whole supply chain is disrupted, and cost of all of that is creating a huge backlog. And really focusing the mind on who we need to pay, why we need to pay, and what's around that. So any insights directly on kind of some of these things where you see are consistent with your seeing across your client base as well?
Yeah, no, absolutely consistent. I think just to pick up on what you're saying about acquisitions and mergers, we're seeing quite a lot of deal activity already this year, and I think that will continue for most of 2026. That's not just kind of straightforward PE buying a given company. Quite often it's carve outs from quite big organizations that can be quite complex. So you need to come off an ERP system that's existing and set up a new ERP structure. There might be commingled invoices between old co and new co, but also it's a chance to reset processes and to reset the path forward in terms of P2P maturity. So yeah, lots going on here as well. I think in terms of the AI, the adoption of AI, I think we're still very much in the early days of adoption, particularly within a AP setting. But I think there's so much low-hanging fruit for so many organisations that it doesn't take much effort to change the dial with a few of the core processes around P2P particularly.
And just going back to the market geopolitical environment, do you see that having a huge impact on cash flow for businesses and supply chain? I mean, like we're talking about, if you can gain a marginal gain in your cash working capital, given how the cost of fuel is rising so dramatically and the impact that has, is there a huge amount in that?
Well, definitely. I think we've always said to clients, typically working capital is the cheapest form of finance. So if you can improve rather your working capital performance, if you can build resilience into your balance sheet and increase cash performance, then that can really help to kind of future-proof where there are sudden changes in geopolitical events, or if there is particular changes in given markets. Having that resilience in the balance sheet really positions businesses to respond well. So we're seeing, particularly from private equity sponsors, we're seeing an increase of them asking their management teams to demonstrate that self-help by improving P2P performance, by improving the customer cycle, holding less inventory, rather than going back to sponsors asking for further liquidity to be injected.
Okay, very interesting. So just on that, delving a little bit deeper into that, if I'm sitting here on this call on our webinar and delving into this, we've prepared some quick ones and we'll go to the layer deeper after this, but some of the red flags that you would see if you're self-diagnosing here on this webinar, what would you see straight off?
So I think, typically working capital gets measured at 1 minute to midnight at the end of the month. It's your DPO performance, your DSO, your DIO, metrics which indicate kind of how your customers are paying you, how you're paying your suppliers, and how much inventory you're holding. Actually looking at it kind of more holistically through the realm of what's going on in a month and measuring cycle times is typically how we've started to think about it with our customers. We typically get brought in two situations. Firstly, a stressed environment where our clients are running out of cash, and therefore we are needed to help them to protect liquidity, so to find some levers to help improve working capital performance. But more and more so, we're helping healthy businesses to do that kind of self-help and to find that value within the balance sheet. Depending on the maturity of the business we're working with, some of the red flags on the screen I think will particularly resonate. Some of our clients are sometimes on the back foot around payment runs, so they've got an unhappy supply chain. They're kind of jumping up and down because they've got lots of late payments, and therefore the AP team have to respond to that through multiple payment runs in a week. Senior management are constantly getting pulled in because a supplier is unhappy or a critical supplier is about to withdraw supply. We talked about the KPIs, but KPIs really around working capital being owned by the finance team rather than the organisation as a whole. we've talked about payment timelines already, but common that month-end surprise around an invoice appears in someone's inbox, and it's the first that the finance team hear about it is because the supplier is late, it's overdue, invoices being sat in drawers, that kind of stuff. I think if you've got those sorts of problems, then solutions like SoftCo can be really helpful, because sorting data out, sorting processes out, reducing the side of desk spreadsheets that tend to happen can certainly be valuable.
Yeah, I suppose, look, just going back to some of these, we've talked about kind of some of the payment run is probably the obvious one, and who shouts the loudest, and we would see that quite a bit when we look in here to, obviously you're talking about the days payable outstanding, your on-time payment rate, but I think invoice dispute feeds both of these in terms of what you're receiving, and if you've got a low or a high invoice dispute rate, you're going to have early payment discount captures not being realized either. And then if you look about your cash visibility and forecasting, where does that lie? If you've got a high level of disputes, you're going to have poor accruals, you can have all unallocated payments. It's kind of a vicious circle across the board, but I think what we're saying here is, look, there's many ways you can view this. Supplier terms compliance, are you paying to terms, which is all ties back into our prompt payment codes. Maverick off contract spend, so that's possibly where we would see a lot of that, is invoices arriving to the business and the supplier hasn't been set up, and all of a sudden you've got to do a new supplier onboarding process, and gives you a huge amount of headache in terms of onboarding and then getting invoice paid. And look, duplicate invoices can be a huge issue across the board as well, in terms of where you have poor processes, suppliers in particular, keep resending invoices in an effort to get paid, but all it does is actually cause more issues for the incumbent AP team.
Killian, is it worth just jumping back to your point about forecasting? Cash forecasting is a really important topic at the moment, particularly where the cost of capital, for a number of years in kind of 2010s, we saw a relatively low cost of capital. I think as that increased over the last couple of years, we've seen a much greater increase in focus from CFOs, but also the kind of wider execo of clients around cash flow forecasting. Obviously, businesses running out of cash, that's an absolutely bread and butter activity, but other kind of healthy businesses are also having an increased focus on cash flow forecasting. If we think about it from a P2P perspective and the kind of cash out of a cash flow forecast, it should be relatively straightforward to be able to predict the next few weeks, where you've got invoices on the ledger. You can see the kind of unwind of payment terms, and therefore you can understand with quite a good degree of certainty when things are going to go out. The outer weeks, when you're relying on purchase teams and others to top up that forecast, there can be a bit of noise. But yeah, increasingly we're seeing where there's noise in those near-term weeks, that is a symptom of a poor P2P process, because you've got surprises and because ultimately the business might not be in control of cash outflows, and it might be reactive rather than proactive about how it manages those supplier payments. Okay,
thanks, Nick. Where I was just going to get, just in terms of the process efficiency impact, I'll take through some of that, but some of the cycle time and invoice holding time, everything kind of stems back to getting efficient processing so that we're in a position to take advantage of any pay on time, get efficiency in terms of payment terms, get efficiency of optimizing the whole cash. And when we look at our P2P maturity assessment, let's take you through some of the things that we would do on our side. So we obviously have this maturity framework, and I know we've worked alongside here, Nick, on a few different things, but when we look at this, what we try and do is understand the processes that are broken, that are breaking ultimately your cash position down the line. And look, there's a number of different things here. We'll go through your organization profile, your ERP system, then we look at how you're doing your supplier onboarding and your master data. Is that all manually driven? Some of your approval matrix controls for your SOX compliance, procurement. Basically, give yourself relevant scores after this. Are you, like we talked about there, have you got a high maverick spend in terms of purchase without POs? How are you doing your tendering and contract? And then if we look at some of the invoices, these are things that contribute to low invoice processing. So multiple invoices on one attachment. We'll say, yeah, we have that quite common. people logging onto portals, invoices sent to multiple mailboxes across entities. You just referenced that there, Nick, in terms of what can give AP a headache often is invoices appearing to somebody's individual mailbox. It appears at the last minute of the finance function, and now all of a sudden you've got a supplier shouting in order to get paid because they're 90 days outstanding. Your invoice approval, so invoice approval routes, approval delays causing breach payments. What are the symptoms? So this is an assessment that we take everyone through. Some of the common things that people can process invoices are invoices right ahead of the GRN, no PO listed on the invoice if it's a poor PO process, freight on an invoice and not on a PO, price variances because prices are changing quite dramatically at the moment. All of those things contribute to slowing down the invoice approval process, but ultimately, if you look at the KPIs here that we're talking about, of how long does it take to get an invoice into your mailbox, out to the business and signed off and approved? So what's your average time? So lots of people live north to 20 days. Best class, as we see here, is 1 to 3. If we can get into 7 to 10 days, you're in good shape. What's your touchless processing rate? What are your exception rates? You can often have quite high exception rates. What's your on-time payments? So the prompt payment performance and practice codes, they're very much driving who you're paying on time over a monthly and quarterly period. So lots of people live in the kind of 50% category. What percentage duplicate invoices do you have? Your PO coverage, how good or bad is that? Often people would say to us, we have very high PO coverage rate, but when you actually drill into it, they've got lots of retrospective POs. So the invoice arrives and they're raising the PO after the event, which masks the problem, which from an efficiency point of view and payment, because the PO approval could take an awful long time. And ultimately what those things drive is a very high cost per invoice. And we're trying to bring that down all of the time, everywhere we go. We talked a little bit about e-invoicing, what countries are relevant and upcoming. So we talked about France being relevant, Germany's coming. We looked at the ones that came in last year in Belgium. And in America, Brazil, people are trading a lot of companies trading with us in South America and Brazil and the various countries. And there's more coming over time. So that's an ongoing process that people have to look at. And then when you get into payments, what are the key areas here? So supplier bank detail changes not flagged before a payment run, very, very common problem. Incorrect bank details, ad hoc urgent payments outside of standard controls. They're things that can create issues for you in your overall thing, particularly when we're trying to maximize and optimize the overall the overall cash flow position given the challenging market conditions. So what we would like to do with anyone who's on this call is come back and sit down and go through this overall scorecard with you, see what that translates to, and ultimately give you a position on what working capital will look like and all the various things. And there's many ways we can work with you on that. I know Nick has huge experience in the space, so just to give you a bit of a flavor and backdrop of what that looks like. So when we get into the best practices in this space, I suppose we're really talking about what are the approval processes. You mentioned there, Nick, about mergers and acquisitions. There's carve-outs of different businesses, what's going on. It's an opportunity to reset and an opportunity to kind of go, okay, what practices do we need to adopt and why should we adopt these? And I think as part of this assessment, what we're trying to establish is what are the practices that are going on, because people often don't take time, they're too busy firefighting to actually go, what is the benchmarks? Often the case when we ask these questions, and I defer to you now, Nick, when we ask these questions, they scratch their head and go, we're not measuring that, we don't understand that, we're not managing that. And if we say just measure for a week, it gives them an indication and guideline. So is there stuff in that, Nick, that you would say kind of for a reset button, what people would you ask them to look at?
I think we typically look at it across 3 areas. I think the first would be the processes that are in place. So how do you accept an invoice? What matching needs to happen to get it approved? Like when does it make its way onto a payment run? How frequently do you make payment runs? So the processing side of the business, absolutely number one. And that's the stuff that's typically within a business's control. So generally relatively straightforward and lots of quick wins there. The second, again, from a working capital perspective, we would look at is the adherence to those processes. So if you do have a weekly payment run, what percent of payments are made via exceptional payments? What goes early? What goes outside of what goes? What's kind of your like standard payment terms, and what's the adherence to those standard payment terms? What approvals happen when non-compliance needs to occur? So that's the second area, is the kind of adherence to those processes. And then the third is around the commercial terms that you have with your suppliers. I think lots of focus typically happens around the commercial terms piece. So what are your terms with suppliers? What are the benchmarks? And what's the art of the possible there? But actually, you can get as much benefit from processing and compliance to your processing. So yeah, I think having kind of a balanced portfolio of levers means that you can go after the maximum benefit. It's typically the people who look at it from a top-down perspective. So people will typically look at DPO and maybe benchmark that to your competitors. But actually, from our experience, building a bottom-up portfolio of levers validated by the business is where you always have the most success.
Okay. And that kind of ties into when we look at a lot of these things in terms of understanding from the bottom up of, okay, you talk about the DPO, but actually look at what are our KPIs that we're talking about in the assessment there in terms of your invoice cycle time, your approval time, your exceptions, all the different things. And once you look at that, what we want to work with companies on is process mining for the bottlenecks, what are the benchmarks against the industry, and then ultimately allowing people to look at the change management. And I think one of the key things for all this is having the audit trail for transactions and the information, the visibility to go, we know this is different, why it's different, and how we can improve it.
I think, just to add to that, Killian, I think we're seeing a lot with our clients at the moment that when new, particularly with AI, where new software, new processes are coming into business, I think we're all a bit tired of like another app or another piece of software that we have to use. The change management is the most important thing at the moment, making sure that people understand the value of having a new process or revising an existing process is absolutely key. We've all got lots of things that take 1 or 2 hours extra a week, but if you've got something new or a new process, having that change management, making sure you get buy-in from the business is often underinvested in, and I think is kind of a key learning from the last 6 months or so to make sure that you get that right when delivering change.
Yeah, and I think that feeds into our implementation journey slide here. I suppose for me, what you just said there is very important, and I think lots of people that we work with know they've or recognize they have symptoms or problems within the thing, but it's difficult to articulate and come back to their executive sponsor or cross-functional team with maybe a CFO, controller, whoever the relevant people are, and go, look, we've done this assessment, we understand we have these challenges, and we need executive sponsorship to support this, because to get the change management implemented, particularly with invoice approval and query management, or maybe better PO practices, that message is not coming from the AP team, that message is coming from head of procurement, CFO, that is being saying, look, the impact this is having on our working capital, our cash position is huge because we're not able to take advantage of this and we're working in a volatile market. And I suppose, look, we would look at this as saying, you got to present data with the right KPIs to all people in the organization so they see the clear metrics around it. And it is iterative. You have to kind of target your worst offenders. Don't try and fix it all at once. But I think when people are looking at our solutions like the SoftCo platform, we would look at it and go, look, it's typically a 16-week journey for us to deliver and implement. But I think some of the things you talk about with working capital and your process, if you're working with your clients, I think, again, it's very iterative. You're all the time looking at your quick wins, and it takes time to see impact to change over 2-3 months. What would be your key takeaways on an implementation journey on your side, Nick?
I think the change management piece, as we said, definitely right. I think people tend to jump to the implementation quite quickly, but I think investing in a good baseline of data so you can understand your suppliers, how they've been paid historically, and exactly where the opportunities are, coming back to that process, compliance to process, and commercial terms. If you've got good data, you've got a good baseline, then it certainly helps you track and monitor the benefits. It helps you monitor where suppliers are unhappy or where they've had challenges before, to really understand their thinking. So I think getting that good baseline and really investing in that data at the beginning. Coming back to the beginning of this conversation, we talked about some of the symptoms of a bad process where you've got suppliers unhappy because they're always getting late payments. That's really a symptom at the end. It doesn't mean that necessarily you're paying people too late or your payment run is wrong. It's an indicator of something's wrong, and therefore you've got to do that detailed analysis to understand exactly where the process isn't performing as it should. So not sure I've answered your question there, but being kind of holistic and thinking across that kind of end to end, from the moment you engage with a supplier, you select them as a preferred bidder or whatever, through to.
My question really is, if we were working hand in hand with you guys, we obviously will implement software to give you better processes. We'll talk in a moment on our next slide about ROI. I suppose my question is to you, working in advisory and kind of the whole financial thing around working capital, advisory management, how quickly could a client see a huge impact in terms of cash? You mentioned there a few times about cash realization, or working capital is the cheapest form of finance. How quickly can we start seeing benefits of that to the business?
Yeah, I think we typically say to our clients that from our experience of kind of, I mean, I look like I'm 12, but I've been doing this for 15 years or so now. The typical benefit target we would suggest is between 3 to 5% of revenue. That's across P2P, order to cash, and inventory. That's not cash that will disappear overnight. That's cash that we think we can sustainably deliver to help improve, or through improving working capital performance. Typically, a period we suggest is around 18 months to deliver that 3 to 5%. However, from my experience around P2P, a lot of those tend to be kind of quicker wins. There's, again, your processing, your adherence to that process, that's generally where you'll find quite a lot of the quick wins. Some of the renegotiations with suppliers where you might already have existing contracts, that can take a bit more time, but typically we'd say kind of for the full 3 to 5% of revenue, capital benefit, we'd say kind of up to 18 months as an indicative timeline.
Okay. So I've skipped on here to the return on investment section here. So look, from an APAutomation perspective, and you look at the whole maturity assessment, there's many different metrics that people can look at here. So reducing the cost per invoice, the number of invoices per FTE, what your straight-through processing rate, the approval cycle time, all of these things contribute to basically giving you benefit and cost. And I think everyone is looking at that, because every business for us at the moment is looking at the overall picture around where can I find increased efficiencies across the business and how do I become better. And as I said earlier on, AI is probably driving that, because that's all the narrative on the papers and the media. Everything is saying, oh, AI, but it's probably early adoption in the finance world as of yet. So there's definitely a huge benefit there. But I think what you just outlined there is that's the platform basically to give you a bigger benefit across the board. And if we'll just jump onto this slide here in terms of working capital, that when you get the foundations and all your fundamental processes correct, that can translate into a bigger working capital process, because you're able to maximize all the opportunity there. So just talking through this example, Nick, you might just give some headline examples here of some of what we've presented on screen here.
Yeah, thanks, Killian. I think just to build on what you said, I think when we talk about AI with our clients, a lot of them view that as kind of cost out, or taking people out and replace them with bots. From our experience, we think about it again from an AP perspective. It means that your AP team are doing not just kind of stamping invoices, processing invoices, but actually doing more of the value add around actually investigating why something has happened, or thinking more strategically around a given part of the process. So so definitely lots of benefits just beyond the cost horizon. From a working cap perspective, I mean, if we take this example around DPO performance, typically we look at that as so DPO being days payable outstanding. So looking at if you've got an AP, if you've got kind of an AP ledger, we'd look at the potential benefit. So if you spend, in this example, 100 million per year, if you improve that by 5 days, so if you can get supplier terms out by a few days, if you can control a better payment run process, perhaps in arrears, not necessarily in advance, if you can eliminate early payments, that 5 days on average will be worth 1.37 million of working capital improvement. So that's on average throughout the year, you'll see 1.37 million extra of cash in the business. So in an environment where you've got interest rates, I know recently they've kind of gone up a little bit, in that environment, again, it's cash in the balance sheet that you can release for other activity like M&A or growth. So yeah, definitely something we're seeing a lot more focus on across our client base.
Yeah, and I think thanks for explaining that, because I think all the time that gets kind of lost, and I think the importance of the good foundational business practices facilitates this. And this doesn't, they don't tie the two together. It's kind of, if I don't pay people, it's good, but you have to have good practices, keep everyone optimized and everyone on board with everything else. So look, we're just coming up to 40 minutes on this thing, and we kind of try and keep these webinars on time where possible. I'd like to thank everyone. We've had many different questions throughout the afternoon here from different people. So one of the questions was, could we get a copy of the assessment? So, and if you want to do any assessments with ourselves, we're happy. So yeah, we can absolutely share that. And one other question here, Nick, was just, can we get some contact details for you? I think we've got somebody very interested. So we'll get Nick's details after. So I think just for me, just wrapping up, and Nick, I'll get you to come back on this, we've kind of covered a lot of it, is cutting the AP processing costs, deliver fast savings to the P&L. Early payment discounts is something that people are probably chasing now, given the high volatility of all the different markets. We've mentioned there about the DPO to release material cash and working capital. A huge thing for us at the moment is actually fraud prevention. And I know, Nick, we're seeing it hugely in our client system in terms of people submitting invoices that are fraudulent, and fake emails being presented with fraudulent invoices. Are you seeing much of that across the board as well?
Yeah, bits and pieces. I think particularly around like changing of bank account details, we've seen quite a bit of activity around that. But having good processes and robust controls around that hopefully eliminate some of the risk. But and I think the other thing is the kind of criminals doing that activity are becoming increasingly smarter with AI. So it's an ever challenging game.
Yeah. And look, I think the last thing is we've referenced here with mergers, acquisitions, changing market conditions across the board. Everyone's saying, look, we have to grow, we have to get bigger, we have to improve our business, but they're constantly looking to do this on a more efficient basis without adding the headcount. So anywhere we have an opportunity to leverage better cash position and do things more efficiently, I think is the key takeaway. So for us, I just want to thank everybody for joining. It's been very enjoyable chatting with Nick. Great to get your perspective from the Interpath perspective and your client position. We will share everyone's details after. These slides are available to anyone who would like to see them, or just you can request into SoftCo for them. But Nick, thank you very much for your time, and thanks for everyone for joining.
Thanks for having me.